If you try to fix everything at once, you'll probably freeze. When you're behind on sales tax, the overwhelm can stop you from making any progress at all. I'm going to show you the 3 steps that create control and why doing them in the right order matters, so stay with me. I talked to a seller a few weeks ago who'd been behind on sales tax for about 2 years. They knew they had exposure, they just didn't know where to start. Every time they sat down to figure it out, the questions multiplied. Which states? How many years? Do I need to register first? Do I pay first? What if I calculate all of this wrong? What if registering triggers an audit? So they'd close the spreadsheet and tell themselves they'd figure it out later. 2 years of I'll figure it out later, and here's what we did. We broke it into 3 steps, just 3. Stop the bleeding, quantify the exposure, and choose the resolution path. That's it. Within 90 days, they were fully compliant, current filings were in place, VDAs were filed for high exposure states, payment plans set up. Not because the problem got smaller, but because we gave them a process that replaced overwhelm with action. Step 1, stop the bleeding. Here's the first thing you need to do. Stop making the problem bigger. That means getting current compliance in place right now. Register where you have Nexus today, not where you had it 2 years ago, where you have Nexus now. If you're selling enough in Texas to meet the threshold, register in Texas. If you're selling enough in California, register in California. Don't worry about the past yet. Just stop adding to it. Start collecting sales tax moving forward. Set up your platforms to collect tax in the states where you're now registered. Shopify, WooCommerce, whatever you're using. Turn on tax collection for those states. This does 2 things. 1, it stops you from adding to your back tax liability. And 2, it shows states you're trying to comply. You're not ignoring the obligation, you're handling it going forward. Start filing returns. Even if you can't pay everything you collect immediately, file the returns. Filing on time while paying late is much better than not filing at all. Why does this step matter? Because every month you delay getting current, you're adding another month of exposure across multiple states. Stopping that compounding is the highest leverage action you can take. It doesn't fix the past, but it does prevent the past from getting larger while you're figuring out how to address it. Step 2, quantify exposure without panic. Once you've stopped the bleeding, it's time to understand what you're dealing with. List every state where you have sales. Pull your sales data from platforms, Amazon, Shopify, eBay, wherever you sell. Break it down by state. You don't need exact numbers yet, you need a list. Pull totals by state for the past 3 to 4 years. Most VDAs, or voluntary disclosure agreements, cap your look-back period to 3 to 4 years, so start there. If you've been selling for longer than that, you might need to go back further for certain states. But 3 to 4 years gives you a working number. Calculate rough exposure. For each state, estimate how much in sales you had, what the tax rate is, what you roughly owe in back taxes, what penalties might look like, what interest might be. You don't need perfect numbers here, you need a ballpark. Why are rough numbers fine at this stage? Because you're not actually filing returns yet based on these numbers. You're making some strategic decisions. Which states have high exposure, which have low exposure, which are VDA candidates, which are direct registration candidates. These decisions don't require penny perfect accuracy, they require directional clarity. You'll get exact numbers later when you're actually filing. Right now, you're building a plan. What this step gives you is it turns, I have no idea what I owe, into I owe roughly X in these states. And that's how it breaks down. That clarity is what lets you move to step 3. Step 3, choose the right resolution path. Now that you know what you're dealing with, you can decide how to address it. High exposure states with multiple years of non-compliance get VDAs or voluntary disclosure agreements. If you've been selling in Texas for 3 years without registering and you owe $50,000 in back taxes, that's a VDA candidate. VDAs let you eliminate penalties, limit the look-back period, and set up payment plans. Recent or low exposure states get direct registration. If you crossed the threshold in Florida 6 months ago and you owe $2,000, just register and file. The penalties are small enough that a VDA doesn't make sense. The administrative cost of the VDA would be far more than the penalty savings. States where you're borderline get evaluated case by case. Sometimes it depends on the state's enforcement reputation. Sometimes it depends on your overall exposure across all states. This is where having someone who does this regularly helps. But the framework is high exposure and multiple years equals VDA. Recent and low exposure equals direct registration. What this step accomplishes is it gives you a roadmap. You're not just randomly addressing states, you're prioritizing strategically. VDA states get handled first because they have the most penalty exposure. Direct registration states get handled next. States where you're approaching thresholds but haven't crossed yet get monitored. Let me show you what happens when you skip steps or do them out of order. Registering before you understand your full exposure, you might think, I should just register in Texas and start fresh. So you register. The state asks when you first had Nexus. You have to say 3 years ago. Congratulations, you just set your own look-back period and eliminated your VDA option. If you'd quantified your exposure first, you would have known you were a VDA candidate. You would have filed that before registering. Paying without filing, you think, I'll just send the state money for what I think I owe. But without filing returns, the state has no record of what that payment's for. It sits in a holding account. You're still non-compliant because you haven't filed, and you've now drawn attention to yourself without resolving the compliance issue. Filing in all states before prioritizing. This is what happens if you file in all states before prioritizing. You decide to file returns for every state where you have exposure all at once. You spend 3 months gathering data, creating returns. Meanwhile, you're not current in any state. You're drowning in administrative work. You're not making progress on the highest priority issues. If you'd prioritized, you would have gotten current first, then tackled high exposure states with VDAs, then handled the rest. Skipping steps creates more work, not less, and it often eliminates options you would have had if you'd followed the sequence. Here's where sellers get stuck. They try to get everything perfect before they do anything. Don't obsess over exact numbers at the quantification stage. You don't need to know that you owe $47,382.19. You need to know that you owe roughly $45,000 to $50,000. That's enough to know it's a VDA candidate and to prioritize it accordingly. You'll get exact numbers when you're actually preparing the VDA or filing the return. Don't chase perfect historical data. If you can't find sales data from 4 years ago, use 3 years, or use what you have and note the gap. Don't let missing data from 2021 stop you from addressing 2022, 2023, and so on. Don't delay action waiting for clarity on edge cases. If you're not sure if a marketplace facilitator sales count towards your Texas threshold, don't spend 2 weeks researching that before doing anything. Get current in the states where you're clearly over the threshold, then come back to the edge cases. Why does this matter? Because perfection is the enemy of progress. You'll learn more by taking action than you will by trying to model every scenario in a spreadsheet. Get 80% clarity, take action, adjust as you learn more. Here's what you need to remember. When you're behind on sales tax, break it into 3 steps. Step 1, stop the bleeding. Register where you have Nexus now, start collecting tax, start filing. Step 2, quantify your exposure. List the states, pull 3 to 4 years of sales data, calculate rough numbers. Step 3, choose resolution path. High exposure gets VDAs, low exposure gets direct registration. Don't skip steps. Registering before understanding exposure eliminates options. Paying without filing leaves you non-compliant. Don't optimize too early. Rough numbers are great for planning. Perfect numbers come later. Progress beats perfection. Get 80% clarity and act. We've walked many sellers through this framework. They come in overwhelmed. They've been avoiding this for months. They don't know where to start. We do step 1. Stop the bleeding, get registered, and collecting tax in their current Nexus states. Immediately they feel better because the problem stopped growing. We do step 2, quantify the exposure. We pull sales data. We run rough numbers. Now they know what they're dealing with. The unknown becomes known. Step 3, we prioritize. High exposure states get VDAs, low exposure states get direct registration. Now they have a roadmap. Within 90 to 120 days, they're compliant, they're filing regularly, they have VDAs in process or complete, they have payment plans that work with their cash flow, and here's what they all say. I should have done this a year ago. Not because it was easy, but because it was doable. They were waiting for some moment when they'd have perfect clarity and unlimited time. What they needed was a process that turned all that overwhelm into action. We can help you with all of this. If you're behind on sales tax and you're not sure where to start, here's what you do. Schedule a free discovery call with our team. We work with 7- and 8-figure e-commerce sellers every day to help them navigate their sales tax compliance. We can help you stop the bleeding. We can help you quantify your exposure. We can help you choose the right resolution path for each state. We'll build your step-by-step plan together. The link is in the description. Or if you want to get a better sense of where you stand before talking to anyone, take our free sales tax risk assessment. It takes about 5 minutes. You answer a few questions about your business, then you get a personalized report that shows you exactly where you stand. If you're in good shape, we'll tell you. We'll show you what to monitor so you stay that way. If you have gaps, we'll show you what they are, how urgent they are, and what your options look like. If you have significant exposure, we'll walk you through your options like VDAs, direct registration, payment plans, and realistic timelines. The link is in the description. Progress starts when you stop guessing. Let's build your plan together.